Hello. One of my 5 fund picks this year is the Foresight UK Infrastructure Income Fund. And I'm pleased that Mark Brennan, the lead manager of the fund, is here today with me to talk through his approach. Mark, thanks for joining me.
Hi, Tom. Thanks for having me on.
So the name of the fund includes the words infrastructure and income. So maybe that's a good place to start. How can an investor use infrastructure to generate an income?
Sure. So when we're talking about infrastructure, we're really talking about the sorts of physical, critical, real assets that we all depend upon every day. We're talking about transport infrastructure like roads and bridges, schools and hospitals. So these are generally, mission critical assets, and they are often supported by the government, and the underlying source of revenue is coming from the government. So when you combine that long-term critical nature of the assets and the fact that in this case the UK government primarily providing the source of income, those two things combined present a very predictable stream of income for investors into a fund like this.
Okay, so a predictable stream of income there. What sort of level of income are you targeting?
So our target in the fund is a 5% yield. That's what we seek to achieve. And again, we're deriving that from a diversified portfolio of underlying assets active across a range of sectors, but 5% is the target.
Okay, and just to be really clear, that's not a guaranteed income, is it? That's your aspiration. That's what you're aiming for.
Correct. That's our aspiration.
Yeah. Okay. All right. So let's leave the income to one side now and focus on what you're actually investing in. So just talk through the kinds of assets that you're looking for.
Sure. So it falls into 3 buckets, really. So firstly is what we call core infrastructure. And so these are the sorts of things I already mentioned, like transport infrastructure, schools and hospitals that provide social infrastructure. And those are what we call core infrastructure. Secondly, renewable energy. So these are assets like wind farms, solar farms, and other forms of clean energy generation that I think we're all increasingly familiar with. And then finally, we allocate to parts of the real estate market where we see strong levels of government support for the underlying tenants. So often that's healthcare, where it's the NHS that's the underlying tenant. So those are the 3 sorts of asset groups that we focus on.
Okay, so quite a range of different assets. Maybe we could just focus in on one of those areas, because I think there's a lot of interest from people in renewable energy, in the future of energy generation. Maybe you could just talk a little bit about where you're finding ideas in that area.
Of course. So I think that wind and solar is probably a fairly well understood story for a lot of investors. They really fit into a broader theme, which is the energy transition. And the decarbonisation of energy. And that's resulting in opportunities in areas like energy storage, energy efficiency. And we're really seeing new companies start to list in London, which are active in some of those areas. And so, for example, within energy efficiency, we now have exposure to things like electric vehicle charging infrastructure, which is something that people are increasingly sort of familiar with. So those are the kinds of areas that we're seeing new and interesting growth opportunities.
Okay, and I guess, these are big, expensive areas, lots of heavy investment required. So I suppose it's helpful to the government, isn't it, that private companies can help them a bit with that source of expertise and capital.
Yeah, there's lots of companies that want to invest into infrastructure, and given where government balance sheets are post-COVID, government really needs private capital to get involved. So it's a big opportunity for private investors.
Yeah. Now, we talked about income being an obvious attraction of this asset class. There's a lot of talk at the moment about a possible return of inflation. And I wonder if infrastructure is a solution or a part solution to that issue.
Yeah. So if we look at the underlying contract structures on the different assets, solar, wind, core infrastructure assets that we have, in a majority of cases, there is some sort of explicit connection to a measure of inflation. So if inflation goes up over time, we should see majority of the underlying cash flows track that inflationary pressure. So for income investors looking to protect their stream of income from inflation, infrastructure can be a very useful place to go, given that underlying contractual connection to inflation that we see across a lot of the assets we have exposure to.
And in terms of someone sort of trying to put together a diversified portfolio, which I guess is good advice to everyone, they should be doing that. How does infrastructure fit into that picture? I'm interested in how it behaves compared with, say, shares or with bonds. Is it a similar profile, or is it quite different?
Yeah, so we tend to have most of our conversations around its performance relative to equities. And if you look at our correlation historically relative to equities, it's been quite low. Pre-COVID, we were tracking sort of a 0.25 beta, which would mean that if equities went up or down by 1%, our fund would go up or down by about 0.25%. So fairly low sensitivity to equities. And so within a portfolio, it generally has played a role of taking equity risk out, reducing correlation to the wider equity markets, which is clearly for some investors an important objective.
And just looking at the structure of how you have created the fund, so you don't invest directly in the underlying assets, do you? You tend to do it through, I think, listed investment trusts. Maybe you could just explain why you do that.
Yeah, of course. So fundamentally, we're interested in the underlying assets. We want exposure to the wind farms, the solar farms, the schools, the hospitals, the bridges. But given the sort of scale of those assets and given the illiquidity of those assets on their own, it's not really an appropriate sort of asset class directly for retail investors. If you come in with your £1,000 ISA, you can't buy very much, and if you want it back, it's going to be difficult. Investment trusts help us bridge that liquidity gap. The investment trusts are closed-ended, publicly traded, and they're liquid. So we can buy and sell shares in those investment trusts, but the underlying assets themselves are still the sorts of assets that we want. They're wind, solar, core infrastructure. So investment trusts basically help us bridge the liquidity gap and get access to the assets that we want.
Okay. All right. And I've just got one more question for you, Mark, which is, I guess, put simply, why Foresight? I mean, what you've described is all very interesting, but where's your expertise here? Why should someone go with you in this regard?
Sure. So across both public market and private market strategies, Foresight has about 6 billion of assets under management within infrastructure. And our heritage investing into areas like solar goes back to the 2000s. So we have a big team of financing and technical and engineering experts who understand infrastructure assets. And so within my team, when I come to look at the public markets, I look at investment trusts investing into those sorts of asset types. I've got a big pool of resource behind me that I can draw on to get expertise and get perspectives on particular assets and particular geographies. And that's an edge that not a lot of asset managers have. And we think it's really kind of key to why we incredibly invest into infrastructure markets.
Mark, thank you so much for taking us through the fund and your approach. And thank you for watching. Goodbye.